Good morning, everyone, and welcome to the On Time on Target morning show. We are going to talk about the infrastructure bill that is supposedly going to be released today. There's already some news out about what is in that bill. Again, it'll be $2 trillion. A lot of, here a trillion, there a trillion, everywhere a trillion. I know that's the scream from the right and the far right about what will let's talk the negatives first. Inflation fears, it'll increase yields, it'll force the Fed to tighten. I don't think that all of that is true, but it's certainly going to be the storyline. It's certainly something we have to consider could happen. So I can't rule it out just because I don't think it's going to happen. So we have to position our portfolio appropriately. But there are certain things that are set to be, to gain from this. I like a couple of basically infrastructure funds. Grid is one. Pave is another that I'm not in personally, but I do think it's an interesting play on this. Next gen, there's a lot of 5G stuff in this. There's some clean energy, so Q clean. And then if you want some pure plays, we'll talk about U.S. Steel. That's not something I normally invest in, but is now the time. Or U.S. Concrete. Not my normal investment, but these are things that you may find attractive. So we're going to talk about those today. So thank you so much for checking us out. If you're checking us out on replay, make sure you click the subscribe button and notification bell so you know when we go live on a daily basis, which is around when we get posted on a daily basis, which is around 9:30 Central. If you want to join us in the room, there's a Q&A window and a chat window for folks to communicate with me and ask me whatever you want, and I will ask that. And with that, answer those along the way. And with that, let's go ahead and get started. All right, welcome back, everyone. Here's our lineup card for today. Make sure you have your chat window set up correctly and your Q&A window set up with all attendees selected so everybody can see your comments. Standard disclaimer applies. You have to do your own due diligence before acting on anything you hear in this presentation. Full disclaimer information is available at ototnow.com. All right, today, Wednesday, 31 March, end of the quarter. That can lead to some strange moves in the market as folks either they're supposed to be rebalancing, but if there's a lot of funds out there that have to publish their holdings as of March 31st. So it tends to be a rich get richer day. So if there's a hot name out there, say Roblox, and a fund's not in it, they can do what's called window painting, if you will, and buy it on the last day of the month so they can show all their investors how smart they were and that they have this in their portfolio. That was just an example, not an endorsement, but you can see some strange moves in the market, and it's a short week. So don't forget, for Good Friday, the markets are closed. So obviously we'll not have a brief on Friday. So tomorrow will not only be, today's the last trading day of the quarter. Tomorrow is the last trading day of the week. All right. Mission objectives: grow our money, protect our money, and live off our money. Again, we're talking about two things today, which is kind of a protect our money. Some of these are kind of some big safe names, but also growing our money with some of the things that are in the infrastructure bill. So $2 trillion. Here we go. I will say that the market's going to celebrate this. What is not even being talked about a lot is the corporate tax rate moving, to pay for all of it, right? So, of course, in politics 101, when you propose a lot of spending, you have to come up with how to pay for it. Unless it's just stimulus, then you just spend. But so the corporate tax rate The reason I think the markets are up this morning is because it was kind of expected. I think a lot of this is priced in. So that's why you're not seeing a huge sell off in the market. When you think of the corporate tax rate moving from 29 to, excuse me, to from 228 from 21, you would think you would see an immediate 7% sell off in the market because that's the one for one, the profits, the revenue, there's going to be 7% less profits, right? Because you have to pay 7% more in taxes. Largely, I think it's baked in. So I don't think we're going to see a big sell off on the either the proposal released today or even the passage. And I think this is the first step towards the Democratic agenda for raising taxes. So kind of a hidden. It's not super hidden, but kind of hidden. Bake it into the infrastructure bill, which everybody can feel good about, and we have a plan to pay for it. What we want to talk about today is how to invest in this, though. You can see I mentioned them in the open. You can see some down below that: Grid, Pave, NXG, QClean, X, and US Concrete. Those are big names. There's also other names out there that are in the news today that we'll talk about. The marijuana stocks are screaming higher with the legalization in New York. And also this is going to move interest rates, right, because of the specter of inflation. So we do have to pay attention to that as well. So, and with that, inflation, who are the winners and losers, right? So we'll cover that towards the end, but kind of a preview, what appreciates? Well, don't forget that if you are in a stock portfolio and we have inflation, your stocks tend to appreciate as companies pass most of the inflation through to the consumer. So you benefit there. You also benefit in real estate. Where do you lose? Two places: income, unless you get a COLA in retirement. So yes, for Social Security and other things that are tied to the CPIW, then those will inflate somewhat. It generally won't quite capture all of it. But generally, if you're working for a flat, 100K a year, you're not going to get a raise from your boss just because there's inflation, right? So you lose purchasing power from what you're making, which again affects long-term your goals and things. And you also, if you have money just sitting in the bank, again, now you start getting super crushed because it's losing purchasing power as well. All right, the flow for today: long, short, open, short, long, which means we're going to take a look at our around the world topics like we do every day. We'll come back to take a look at our headlines. We'll quickly review these. I'm okay with any of these here until the infrastructure bill actually gets passed. So you're talking a month, whatever. I like Grid long-term, NXTG long-term, and QClean long-term. The rest are more of a swing trade, hold for a few months, make some bucks, and move away. I don't do a tremendous amount of that. I'd rather just go with the long-term holds myself. A lot less maintenance and a lot more upside, in my opinion. All right, we'll execute the market open and transition to Q&A. Thank you. It appears I'm on the wrong screen. Thank you. Let's get that fixed right now. There we go. Thanks for the heads up on that. We'll execute the market open and transition to Q&A. Contingencies and academic resources are all standard. All right, let's switch over to, make sure I can switch fully this time, over to TD Ameritrade, the ThinkPipes platform. What do you see here? Boy, everything's up, right? So I just want a precursor to what I have in the chat window this morning, and I'll refresh it for the names that just showed up. For longs, the plug and charge point. Those are the first two right here. A lot of EV stuff in the infrastructure bill, being electric vehicle stuff. I like the derivatives, like charging sort of thing. Tilray, Afria are up big on the legalization in New York of marijuana, and also X and US Steel, US Concrete, and then also Cliff Resources are up this morning. I don't like anything short today. I would not short into this market. I think now that the infrastructure bill presents more knowns, that the market actually kind of steps it up from here. So let's take a look at where we've been in the market. Again, this is the S&P 500. NASDAQ has brought a house of pain, so your tech stocks have sold off, but they're up almost 1% pre-market. But you look at the S&P, which is more indicative of the broader market, really getting close to bouncing off all-time highs. When you look in at the 5-day view, you can kind of see, okay, we're on Wednesday today, so this is Friday. We had the move up. and then pretty sideways couple of days. So it shows that consolidation and ready for a move higher. All right, let's come back to CNBC.com and take a look at some headlines. First, we'll go around the world. See the futures there. Let me refresh this. Almost in the green across the board. 0.2% in the Nasdaq. Let's take a look in Europe. Red, but not much across the board there. Again, inflation worries. Same thing in Asia. A little more of a sell-off, but things are in the red across the board. All right, VIX is super low, even though we've seen some red in the markets. Here's your 10-year 1.72. Again, that's down from that 1.77 high of yesterday. So we'll keep an eye on that. So, infrastructure speech coming today. We'll see. I could see if that touches 1.8, then the market, is going to sell off from that. Oil right at the top end of our range, 40 to 60. Gold and silver basically flat. 1687, that's pretty cheap compared to the 2000 number it was sitting at for a long time. And then Bitcoin down a little bit, but still closing in on some all-time highs of 58,000 there. All right, when you come back to the US for headlines, there was a payroll number this morning. I did not actually see it. Here's a big COVID number, if you will. I think people are going to like. Pfizer says, okay, yeah, Big Pharma says. I mean, it'd be better if the CDC says, right? But Pfizer says COVID vaccine effective, 100% effective in kids 12 to 15. So again, this is kind of a bifurcating issue, if you will. Either, with the anti-vax crowd saying it's killing people, it's untested. Well, okay, yeah, there's some danger to it that we don't normally have. However, there's also a bunch of people who have gotten vaccinated and are doing just fine. So anyhow, it will continue to be an issue. All right, Bitcoin's still in play. Very close to an intermediate term top. And when you have somebody like Goldman coming in and saying it's offering Bitcoin, that's a legitimization move. It's going higher from here, no doubt. All right, today will be infrastructure day. That will basically kill all of the rest of the, news cycle. I do have an article I was going to do today. I was going to do it today, but there is some traders out there, a lot of brand new traders this year. And I was trying to see if it was in here in the headlines, but somebody's going to end up owing $800,000 in taxes or something like crazy like that. And they only made $45,000. I was trying to find the headline. It's called phantom income. And if you don't understand the wash sale rule, remember, if a stock goes up, if you make 100 on a day trade and then you lose 100 on a day trade, in reality, you're equal. In tax world, you owe for the $100. You have a profit of 100 because you cannot count that loss. Okay, you need to think about that before you just go hopping into Wall Street bets and day trading frenzy, right? So, all right, excuse me. Let's go ahead and switch out of our headlines into looking at grid. Yes, grid's at an all-time high. You're going to see, bouncing off the all-time high for a bit run up from the election because we knew the infrastructure bill was coming. Can you buy in here? Yes, you can buy in here. When we go to talk about, we'll go over to Schwab real quick and take a look. You have grid, and all these kind of look the same because of the anticipation of the infrastructure bill. So you have grids run up, PAVE has run up a little sharper, a little more direct, if you will, from the others. The NXTG, which is 5G and next generation technology, there's a chunk of money put towards a 5G. So NXTG stands to benefit. Q-Clean has sold off pretty hard recently, right? 90 down to 65 with all the EV names that have sold off lately, like Tesla. But I think they're going to get their footing now and go back higher because of the infrastructure bill. If you want a pure play, an individual stock name, nothing wrong with US Steel here. It has run up some. It's going to get obviously a lot of money, and same thing. USCR is US Concrete. Same sort of philosophy. If we're going to put concrete everywhere for repaving roads and things, then they are going to be a place to have your money, at least in the short term, if you will. Okay, we're going to go back to Think Pipes. Get ready for the market open. Give me just a second. Good Good morning, everyone. Welcome to the On Time On Target play of the day. You have four screens in front of you, and they look all remarkably similar, right? We have the SPY, which is gapping up this morning. That's the S&P 500. This is a 1-minute chart. We have Plug Power and Charge Point, all which are gapping up off of the headline of the infrastructure bill. And there's, I can't remember, 180 million, I think, set for electric vehicles, that sort of thing. So those are gapping up big. And then the other one to the right is Tilray. There's the opening bell. Is Tilray, which is gapping up based off the legalization vote yesterday in New York. So I like all of these. I don't like anything short out there today. The move down you see here in Plug and Charge Point is simply profit taking. So expect it to sell off, set a bottom of the day in the first few minutes here as people take profits, and then we'll turn around and go back higher. I like Plug Power the best of these two, but Charge Point still sitting pretty good here. So let's see where the bottom is when these things bottom out. Ideally, you'd want like a 35 cent stop in these, but that may be tough today. We'll see end up where the bottom gets set. So that's what I'm looking at. 35.15 would put us at 35.50 entry. Let's go 35.50 right there. 35.50 long is our entry. Again, we're covering it down to 35.15. I have no problem stabbing in here early. We may get bounced out, but I think we're going to go right to the 3R point fairly quickly. Again, set your stop down at the bottom at 35.15, which is right here at the bottom of the screen, and that's the bottom of the day. So we'll see if it holds as we move on into minute 2 of the market. Okay, so we're here right here at that entry point. So let's do some math. 35.85 will be our first R unit. Again, whatever you risk, that will mean you doubled your money. 35 cents on top of that, to give myself some math problem, is 36.20 is up here. That would be our 2R. Then our exit point is actually on the screen at 36.55. With a name this strong, you might consider, say if you bought 300 shares, you might consider, if it does run up to 36.55, selling 200 of those shares and then keeping a third for a longer term hold, especially if today continues to show market strength. So anyhow, that's how I would play the exit there. We're right back at the entry point, so just hold for now. Make sure it doesn't continue down. If I would not add, but if you're not in the name or you miss the entry, you can certainly pick up the entry here. I'm going to redraw my arrow so I can focus in a little more on the stock chart. All right, got a nice bounce in both Charge Point and Tilray. Let's get in here a little closer. There we go. Flatten my arrow out, makes it look weird. All right, Tilray screaming higher here. Obviously, here was the profit taking. Set 22.6 at a 30-cent stop, would be 22.9 is the entry point. Kind of looks like that's where it gapped to. And then going higher at a 30-cent stop from there would be 23.80 would be your exit point. It looks like that's going to run up almost to that pretty quick here. Same sort of thing. You wait for the bottom. Oof, that probably would have been a sucker entry here if you would have used 23.38 in minute 2, because it did go down and blow through that and then back up now in Charge Point. I'm going to take a look at Charge Point for a long-term hold. I do have some Plug already. I do not have any Charge Point in the book, so I want to take a look at that today. And I also want to look at the Tilray. We'll see where, as soon as I go off air, I'm going to look at where Tilray is. Well, let's look at it now. It's a 180-day chart. So really, it's kind of, had this huge peak. It was the hottest stock ever, right? That happens and then comes crashing back down. Really, when you look at, 20 almost looks safe here. It bounced pretty decent off of 20. So when you think, okay, well, if I'm going to get into this, I've got basically a $3 downside. That's like 15% downside. It's like, okay, well, that's doable, right, in an investment. But if there is resistance here, 15% downside with a potential double to the upside, those are that's the risk reward ratio you're looking for, right? So I'm going to take a look at the entry here today. Afria would be another option that's in play. Looking at putting the ticker in there. Our trade is just kind of sitting there. I'm pretty surprised about that. I thought it would scream higher, but You never know. All right, up to 32, down to 18. So again, that's why I like Tilray better because it came down further. So anyhow, I'll be taking a look at that long term as soon as I'm off the air today. Okay. Let's take a look at some other names out there. We'll leave ChargePoint and plug in here while we look at, we looked at Tilray and Afria. Let's look at US Steel, which is X. So they're up 5%. So you knew this was coming. So if you wanted to, if you got into that early, you've been rewarded. Again, you can buy in here again for a swing trade to where you hold it for, I don't know, a month or so, maybe through the quarterly earnings, but then you probably get back out of it from there. Okay, and let's look at US Concrete. Again, these are not things that I normally invest in, but lower volume, of course, here. But on the move higher as well. And the last one is Cliffs Resources. I don't know exactly what, or I'm sorry, it's not Cliffs Resources, Cleveland Cliffs. I do not know what they do, but they are gapping up today 10%. Did not put anything in my notes other than just an H for a headline, which I don't remember offhand. Not important. I'm not going to invest in it, but if you are a CLF holder, you are being rewarded today. All right. We're in the trade. We are up an R from our entry point, kind of holding. So we'll just let that go. If you're in the trade, pull it up on another screen because I'm going to leave this screen right now. Do give me a heads up in the chat though. If we hit our exit point, I'll come out and close out the trade here. All right. Zooming out to the big picture, you got Mind Medicine up 9%. Twilio, again, tech firm. Tech's been beat up, so I think tech's going to bounce hard today. I'm on another screen. Let me refresh, see if the Nasdaq's up over 1%. It's not. 0.84 right now. I do think it goes up over 1%. BioNTech's doing well. Trade Desk, Shopify, another tech name, MDB, Palantir, tech. There's your Q Clean. That was my recommendation this morning. I talked about up 3%. Palantir getting some love. Goodness, it has been out of favor lately. There's NJ. You know, that's how I like to get exposure to the marijuana space, is just buy the index fund. If you are going to get in the individual name, I think Tilray is your best entry here. ARK funds have been beat up. You know, that's Kathy Wood. She's big in the news right now. Zoom is sold off. ARKG, that's another ARK fund. I'm not going to touch the space fund that opened yesterday. I didn't even do a bit on it. I'm not all that interested in it. I think you can go pure play if you want to go exposure to space. Qualcomm's down here. Boeing's up again. Boeing's up been insane lately. Actually might trim Boeing a little bit here for those that have outsized positions. All right, let's see what's on the downside today. Torque Brands, again, that's a penny stock, so don't touch it unless you're ready to super speculate. Revive Therapeutics, that's a psychedelic. Comcast, Empower, JK Henry. Bitcoin down a little bit. Gilead, you know, is a biotech. AT&T's down because that's what it does, because it pays an 8% dividend. They refuse to cut it. Same thing with Verizon, outsized dividends, so that's why it continues to move down. IBM's in a tough place for the long term. Wouldn't touch it. Luckin in the red a little bit, just a few pennies. NXTG, this is a recommendation I made this morning. It's in the red a little bit there, just a few pennies. Dominion's another name I actually like if you want to get into that specific space. All right. In the utilities and energy space. Up here you see Apple call. That must mean Apple's up somewhat because that call's jumping higher. So, all right, let's check back to our trade. All right, got up to the 2-hour point. It's kind of holding. I'm going to leave this screen as I talk to inflation for a second, and then we can come back to it right before I close. All right, let's look into come over to CNBC here real quick, go over to inflation. So my tagline is inflation, who are the winners and losers? Hey, good morning, Predator. I said, love to see this. I assume you mean the market going higher. Here's our trade and plug. I know you're late to it. Don't take it here. But anyhow, we're in the plug down 35.5, covering the low of the day down here, waiting for 36.55 for our exit. Hadn't happened yet, but we're watching for it. All right. I know it wasn't on the right screen for that, but yeah, lots of green. Okay. What causes inflation? Well, the economy running hot, right? I mean, that means prices are going up. Well, Are certain prices going up? Housing prices have skyrocketed. If you look, and I did see an article that it is nationwide, a year over year, almost 10%. So it's like nine and change of going up over the past year. So generally, real estate's fairly localized, right? There's pockets that explode higher. Austin is obviously doing well with all of the imports from California, as well as the positive press it's gotten out of like Elon Musk and others. So a lot of things to be happy about in the housing market. Obviously, if there's inflation, the housing market inflates with it. It's a real asset. Again, the when you break down to assets, the house is a depreciating asset, but the land is the appreciating asset in there. So the property, the value of the land is going up. So more so than the house depreciates, right? That's where you get that long-term growth in a real estate. So pretty big jump that's already occurred because of interest rates. Now it could continue up due to inflation, even though there will be a headwind, obviously, with mortgages there. Okay, what else wins out there is if you have a stock portfolio. Generally, most companies can survive inflation, and they just continue to pass that on to their consumer, right? So if your portfolio can inflate right along with it, that's a good thing. And again, negative is your income, unless you get a raise because there's inflation. That's not likely to happen. Or money sitting in the bank is obviously going to erode that much faster. It already erodes for being in there and making nothing, but it erodes that much faster. What is the good news out of this? Well, if rates rise, which again I don't think is the the likely scenario out of this, but I know a lot of you believe that's true. And again, when you design portfolios, you consider all factors and all potential outcomes as you design it. So bond yields could actually come back higher, so we can get back into that bond ladder building and continuing to make that long-term engine work. So that would be an upside. And again, some of the shorter term stuff, treasuries could actually start paying higher again. And, those are supposed to hold their value. We saw that if everything sells off, they'll sell off with it, but they're designed to hold their value. They snap back the fastest, being treasuries there. And again, I wouldn't put you into treasuries unless you're well into retirement or super, super conservative, which is fine. But again, those pay nothing right now. So, all right, that's all I have for you today. Again, a shortened week. So think green for today. It'd be nice to see some big green numbers, especially in tech, approaching 1% here. And then as far as, again, we'll have our morning brief tomorrow morning, and then we're off Friday for Good Friday. So with that, I'll let you guys go. You have a good one, and we'll talk to you tomorrow.